so that I'll start recording. All right, so now we are recording. We're recording live right now as we speak. Okay. So in summary, we only have few types of strategies to use for whatever this we want to follow on the chart. All right. So let me quickly show us exactly what I'm following. So I want to share my screen now, and I want to share something with us. I call it my playbook. It is actually my thought methodology, what I follow, my structure in how I pick trades. So I believe strongly that the market can only do three things. It can either trend, reverse, or consolidate. Those are the major things that it can do. Now, each of these three market structures now have a different way to trade them. You must have at least one strategy for each of these market structures so as to be able to trade them. So the last time we met, we looked at the reversal strategy. So today we're going to talk on the trend strategy. We're going to talk strongly on the trend strategy. So if you look at what I'm showing to us here, trend is simply uptrend and downtrend. That's simply what everybody understands it to be. But I think that the variations of this uptrend and downtrend are different. There are more than one type of uptrend and there are more than one type of downtrend. So today we are focused on trend. We've talked about reversal. Today we are focused on trend. So let me share something else with us again. Let me share my whiteboard. Let's say price changes direction. Anytime price changes direction from its support and it starts to move up, it will start what is called an uptrend. Now that uptrend might be moving in a move like this. If the market is moving in this kind of move, it is very easy to understand and very easy to trade. It will continue to do this until it gets to a level where it will then push back down. This is one variation of uptrend. And then there's another way of uptrend again. That one might look like this. Price would go up and then it would consolidate, and do something like this. And then it will move up again and maybe do something like this and then move up again and then consolidate, even, give you some kind of funny move and then move up again. There is another uptrend that looks like this. And then there is one that looks like this, just go up straight. These are the different kinds of uptrends that we have. Now, for this one, I'll call this one number A. I'll call this one letter B. Then I'll call this one C. You see, for the A is very easy to understand and recognize. The B is not very easy to trade if you are just starting, while the C is only caused by news. But both the A and the B are only good to buy in. Because of our position in the markets, the only thing we should be doing anytime we notice that this is an uptrend, until proven otherwise, we should only look for where to buy. Now, according to our ancestors, people who have been trading before us, this part of an uptrend now has been labeled. So an uptrend only consists of what is called higher highs and higher lows. So I said it's called a higher high, and higher low. These are the major parts of an uptrend. As long as price is creating this, price is strongly in an uptrend and it's continuing to push bullish. So the only thing we should continue to look out for is just to buy alone. A reason to buy is the only thing we need. We don't need any other thing again. So in an uptrend, it is very wise just to look for where to enter a buy, regardless of what you are seeing. As long as you can identify it that is an uptrend, just look for where to buy. And where are the best places to buy? So the higher high is what I'm going to represent with HH, and then the higher low is what I will represent with HL. You see it? Then this would be the higher high again. and then the higher low will be represented by HL. Now, if price is moving up, price must continue to create a new higher high and a new higher low. The reason why this is called higher high is because it is higher than the previous high. Why this is called a higher high is because this high is higher than the previous high. And then this higher low is higher than the previous low. So once price is still doing that, price is still in a typical uptrend. Now, by the time this price is going to create a new high, it must be higher than the previous high. That's how we know it's still going in an uptrend. And by the time it's creating a low, it must not be lower than the previous low. It must be higher than the previous low. As long as price is doing that, price is in an uptrend. And then the distance between the higher high and the higher low is what is called a pullback. This distance here is what we call a pullback, a pullback. See it? It's called a pullback. That's what it is called. So there are three ways to enter a buy in an uptrend. Number one is we can buy at higher low. See this higher low? Any place you see higher low, you can enter a buy there. All of those places of higher low are very good places to buy. So you can buy at higher low. You can buy at higher low. Buying at higher low means you also want the pullback to end, and then you enter a buy. And then you can also buy above higher high. You can also buy above a higher high. Anytime price goes above a previous higher high, you can enter a buy. Yes, that also works as well. The only issue with that is that you must prepare your mind for a pullback. Because once price breaks higher high and creates a new higher high, it has to create higher low. You must prepare your mind for a pullback before you would then continue in that uptrend. You see it? So let me go on the chart now and show us some clear examples of what I am saying. And then we'll proceed from there. Okay, so let me go to the chart of, I can use anyone actually, but let me use USD and then JPY to explain this. So you see, what price was pushing up, and it's the same for any time frame. For whatever time frame you are looking at, you can always use that to explain an uptrend. Anytime price is pushing up, you are going to see higher highs and higher lows. Either it is smooth or it is rough on any of the time frames. I've moved now from D1 down to H4 down to H1 just to show to you that even W1, whatever time frame it is the same thing, higher highs, higher lows. All right. So the market trends on all time frame, but let me use this one that is clear, very, very clear to explain this. So this part here is a higher high. This part here is a higher high, HH. As we can see, that's a higher high. And then a higher low is what we are seeing here. These are higher low here, higher low, HL. This is our higher low. Yeah. And then we also have, now this higher high is what is creating the next higher low. This higher high is what is creating this higher low. Now this higher low now has to go and create a new higher high, a new higher high. Why did I name that place higher high? Because it is higher than the previous area. It is higher than this previous higher high. Immediately price went above it, it has created a new higher high. You see it? And then price went up to create a higher low, and then a new higher high again, higher high again, higher high, and also another higher low. We now have a new higher low here. Yes. So anytime price is doing this, price is creating this higher highs and higher lows, price is in an uptrend. So what am I saying right now? Am I saying now that if right now I believe strongly that USD JPY has created a new higher high. And why am I saying that? Because it is higher than the previous higher high. Yes, that is just as simple as that. USDJPY on this time frame, I'm on a weekly time frame, doesn't matter the time frame, has created a new higher high. Why? Because it is higher than the previous higher high. So at what point do I join the buy? I told us one of the reasons why I can join the buy is once I see higher low being created. So how do I know that higher low has been formed? That's a symposium discussion. We're going to discuss that very, very soon. So if you have questions, please note them down. There will be time to ask your questions. So price has created a new higher high right now. Why? Because it has gone higher than the previous higher high. See it has gone above this previous higher high. Now, once price pulls back, where are the pullback on this instrument? You see, these are the pullbacks. All of this area here had called the pullbacks. Once I see a pullback in that uptrend, this is a pullback, I then believe that price has created a higher low, and then I can enter my buy. Once price is doing this, just decide to buy. What is the thing to see before you would know that pullback has ended? Now, people have dedicated their lives, white men, they have dedicated their lives trying to answer this question. How do I know the exact time that a pullback has ended? And just so let me just add to it that a higher low is only considered a higher low if it is able to create a new higher high. Very, very important. It must create a new higher high. Any higher low that is not creating a new higher high is not really a higher low. It's a faulty one. And that is the one that is very easy for price to break. You see it? So what I'm saying is that when price is going up and it creates a new, this higher low has to go above and create a new higher high. And by the time a new higher low is created, it must go above and create a new higher high. Once a higher low fails to create a new higher high, if a higher low fails to create a new higher high, that gives us a signal that something is wrong. And that kind of higher low is the one that is very easy for price to break. That one is very, very easy for price to break. It's very, very easy for price to just, break it and then violate the higher low. And then we might now begin to see some other things. You see it? So what is the sign to see that this higher low has been created by price and then it has ended so that I can now pick my trade? What do I need to see for that to happen? So I said people have dedicated their life to it. Remember our signal for buy, that same signal for buy at support. Remember that is going to be a red candle first, at support, followed by a green candle, then followed by a green candle. So red candle followed by a green candle. You see that same signal to buy at support. That same signal to buy at support is also the exact signal we need. At what area? So people have different ways of speculating where their higher low has ended. Me, I decide to camp with the people who have made the most of trading using their system. People like JC Livermore, Ray Dalio, Tom Hoodgard, the person I just sent this material to the group for us to read for this month. Mark Douglas, they're like that. And this guy that owns S&B Carpenter, so those kind of guys, they are the ones that I believe. They are not all those fancy indicator and Ferrari flashy traders on YouTube. No, those are really people I believe that have made a mark in trading, and I believe and I trust in their words. So whatever price does in how it creates its higher low is up to price. But you must have your own particular scenario that you choose to trade. So what I'm saying in essence is that, okay, I was talking about Mike Belafori. Yes, those are the people that you can Google all these people are mentioning their names and read about them and study their material. Now you see, those guys that I just mentioned now, most of them, how they tend to target their own pullbacks. So Pullbacks can end in different ways. There are different ways a pullback can end, but you must have your own that you trade. Let me repeat myself again. The way a pullback can be created on the chart are obviously more than one. We have more than one way pullbacks can be created on the chart. However, you must now have your own that you are trading, your own scenario that you are trading. So it's not every pullbacks that you're going to understand, but the one that you understand and that I'm going to teach you now, I believe if you trade those ones, you will have more profit more of the time. So I trade pullbacks that goes back to 50% of the previous move. So what do I mean? This is our signal to buy at support if we are buying in an uptrend, just as we all know. Now, once price starts to move up and creates a higher high and higher low, let's say this is where the higher high ends. By the time the higher low is going to be created, by the time higher low is going to be created, price will start by forming red candles or whatever candle. Yes, it's going to be a red candle. It can form red, green, whatever. But a red candle signals the start of a pullback in an uptrend. Now, that pullback, I expect it to get to at least 50% of the previous move. Once I see price pulls back to 50% of the previous move, and then I would now see that same signal to buy at support. That same signal that I use in buying at support, which is a red candle first, followed by a green candle, a red candle first, followed by a green candle. Once I see that at 50% of the previous move, yes, please listen to me very well. And then I will then enter my buy. I will buy there. This will give me my signal to buy. And then my stop loss. My stop loss, please, it's very important that we pay attention to what I'm saying now. My stop loss is not going to be before the previous higher low. No, I don't have to put my stop loss before the previous higher low. My stop loss has to be below the previous higher low. That is where my stop loss is going to be. Why is my stop loss going to be there? The reason is because that is where price is not expected to get to. This is where my stop loss will be. So my stop loss is below the previous higher low. Once I am buying at 50%, and then my take profit can be anywhere as long as it is not above a resistance. That's my simple rule to enter an uptrend, or one of my most profitable rules to enter an uptrend. And I don't take trades who is going to give me less than 1:1. If it's a 1:1, fine. If it's a 1:2, perfect. 1:3, fantastic. But I don't tend to go above that most of the time. So 50% pullbacks for me does the magic, and then stop loss below previous higher low. An example of that is also, let me show us a clear example of that, and then we'll move on, right? An example of that is what we're seeing on USD JPY that I'm using to explain to us. So look at this pullback. This pullback is pulling back to this pullback right now is pulling back to 50%, pulled back to 50%. What do I mean 50%? Let's say this is where the uptrend started from here down to this place. Of course, we can see our reversal signal. Why do you think we should buy from here? This is our reversal signal, where I've labeled as blue. And why is that place a reversal signal? Because price has pulled back, has gone up from there before. Let me also label that place. You see, price has gone up from there before, and then price came back there again. That is our reversal signal. You see, and then price then moved up from that area. This is the higher high. See, price got to this higher high. Now we'll notice that when the pullback started, it started with red candle, and then the pullback to 50% of the previous move. It might not be exactly 50%, but at least the pullback should be 50%. And then this is our signal to buy. The end of that pullback is also the same signal as buying at support. red candle first followed by green. So I'll buy there and then put my stop loss below the previous higher low. And where's the previous higher low? Shapes inside here. Look at this is below the previous higher low. Below the previous higher low. And then my TP would then be anywhere above, but it must not be above a resistance. This is where my stop loss will be, below the previous higher low. It's as simple as that. Right now, as we speak, on this chart of USD JPY, as a swing trader, let me clear all of this and say I want to enter a buy now using this principle that I'm teaching us. You see, from here, if you look at it, from here to up here is a new higher high. I expect price, it's a very simple rule, to pull back to at least 50% of this move. Once price gets to 50% of that move, I then need to see the same signal to buy at support, which is going to be a red candle first, followed by green. If we look at every place where pullback has ended and then the uptrend resumed, it has always been a red candle first, followed by green. It doesn't matter the size of the red and green candle. As long as it's a red candle first, followed by a green candle, we are good to go. You see it? So it's as simple as that. That is my simple rule of trading an uptrend. It's as simple as that. That is a very simple rule of trading an uptrend. All right. Let me show us another example again. I think we have one on USD card. USD card. Yes. It's another very simple rule. Yes, we use it making some profit here. You see price moved from here. This was a very huge move from here down to this place. You see it's very, very huge. And when price was to pull back, it pulled back to 50% of the previous move. 50% of the previous move. And then what was our signal to buy? A red candle first, followed by a green. Just as the same signal of buying at support. So the red candle first followed by green is not what is important. It is in the position where it is forming. The position where it is forming is where it's more important than the red candle first followed by green, right? So I just spent enough time now in explaining the uptrend, whatever uptrend it is, as long as price is pulling back to 50% of the previous move, and then we are good to go, right? So let me show us more examples again, and then we'll continue. With the class, all right? So look at this. This is the chart of CAD CHF, the daily chart of CAD CHF right now. And this is yet to happen so that we can then reposition. I hope some people are making money from CAD CHF. Especially those of us that are in class, physical class, because I dropped this long before we started this. So price has gone up. See, it has gone already. Fantastic. And then let's assume that we missed all of this buy. Where is 50% of this move? 50% of this move is here, where I'm going to label as blue. That is 50% of the move. 50% of the move is here. See it? So I expect price to pull back to at least that area, that 50% where I've highlighted. And then the candle that we get there first, by the special grace of God, will be a red candle. Once I then see a green candle there beside it at that 50%, I'm good to go for a buy. I'm good to go for a buy. All right. So that's how I'm going to be approaching this chart of CAD CHF when the time comes to enter a buy trade. Right. I hope we got that. Now, what about the uptrend that does not have clear pullbacks? What about the uptrend that the pullbacks are not clear? Maybe it just goes up and then it consolidates and then it continues to go up again, it consolidates, or maybe it's going down, whatever. The second way to enter an uptrend is to target the higher high and use a buy stop above that higher high. target your higher high and use a buy stop above that higher high. That's just, it's as simple as that. So when you see the higher high and then the pullbacks or the uptrend is not as clear as the first one I just explained to us, what we just need to do is to look for the higher high and put your buy stop above it. Now, when you put your buy stop above a higher high, anytime you're using your buy stop, please make sure that your stop loss is below the previous higher low. No matter how long it is, it must be there. That's what it's supposed to be. So you might want to use the very decent lot size as possible. Or you can calculate the pips and then calculate the right lot size to use. It depends on if you have that knowledge already. Right? But anytime you see an uptrend that is not so clear to you, you don't know at what point do you join this uptrend, just target the previous higher high and put your buy stop there. And put your buy stop there. It is as easy as that, right? Let me show us some examples and then we'll go on. All right. So this is an example of an uptrend that might be very, very difficult for some of us beginners to trade now. Yes, because this is already an higher high, even though it's also at resistance, but it is first higher high. This is higher high. All right. Now, this pullback, of course, if I'm going to enter instantly, I would prefer this pullback to move to 50%. Ultimately, that is how I would prefer it. I would prefer it to move back to 50%. Once it gets to 50%, that would ignite my instant buy. And then I see my criteria for buy. I would enter an instant buy here. But another way I can be approaching this, above this higher high, I can decide to put a buy stop and decide to put a buy stop at that above that higher high. So price would only pick me for a buy if I put a buy stop here. Price would only pick me for a buy if price goes above that higher high. That is the only way price will pick me for a buy. So I would only be picked for a buy if price goes above this higher high. Now, the reason why I really don't like this so much is that it would allow me to risk so much. You see it? It would only allow me to risk so much. So I always like to use it anytime I am trading commodities. The commodities markets are very good markets to use this kind of things, or even indices. So let's say I'm trading a commodity like sugar. See, this is the chart of sugar right now. This is the daily chart of sugar. And then this is an uptrend, but the uptrend is looking so fuzzy and all of the higher highs, everywhere I can see higher high, above them are just potential places where I can place a buy stop. You see, above that higher high is a good place I can place a buy stop. This is another good place I can place a buy stop. And then this is another good area I can place a buy stop. So right now, the new higher high is above here. I can put another buy stop here so that anytime it goes above that higher high and then the uptrend continues, it will pick me for a buy. The only clause there is that I must prepare my mind to absorb some kind of pullback when it happens before price will then continue to go higher, because it will make logical sense that if price is going to go up, let me erase this. If price is going to go up, price is going up from support, price goes up from support, it does something like this, goes up again, and it's doing this, and I'm targeting a buy above here. It means my buy stop is there. So buy stop, sorry, I'm not so good with drawing. So let me use text. This is where I'm going to set my buy stop at that higher high. So I must prepare my mind and understand that price should pick my buy stop. There is a very high tendency price should pull back. You see it, which is very, very normal before price will then go again in my direction. So when you understand what you are doing and then you enter the right trade in line with the trend, and then you now see price going through pullbacks, you should not be scared and just run out of the trade. No, there's no reason to panic at all. You don't have to panic at all. You just need to wait for the move to the pullback to end, and then the real trend will continue. So anytime you identify an uptrend, fantastically, that is how you should approach it. See, so any of these two ways, either you're waiting for pullback at 50%, or you are putting the buy stop above the previous higher high. You see, it's as simple as that. For currencies, mostly, it is mostly wise to just wait for pullback and then just join the buy, or you just use a buy stop above the previous higher high. It's as simple as that, and then it should be good to go. All right. So today we have talked on uptrend very much. Then tomorrow we're going to look at the downtrend again in details again. All right. So we're also going to take questions. We can please write down our questions, and then we're going to end the class temporarily now, and then we'll come back after 10 minutes to take our questions again. All right. So I'll see us in 10 minutes time.